Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we'll get a little bit of business done here today. These were trades that we were putting on today. We were buying soybean oil here in December at $45.05. It's now down about $180 on this. Our stop is at $45.55, so we're risking $300 on that trade. Also, we were looking to go long the corn, and as you can see here, as we move this over here just a little bit, let's get the corn up here on the December on the daily. You'll see that we bought that yesterday, and we had a 3-cent stop on that, and it was lost $150 on that. So we lost a little bit on the corn. Looks like we might lose some on the soybean oil, but boy, we had a couple of really good ones. Beside the S&P, folks, we've been talking about the short side of the crude oil market for quite some time here. Hopefully, I'll be able to find it. Here it is. Let's get this up here. And we'll just take a minute to see what we're doing here in crude. You know, it just keeps falling out of bed, folks. And even last night, it's down, well over $5 from where there was our 382 up here at 80.80. Look at the secondary one right here, just spot on, right at the exact 382. Another 382 right in here, and it just keeps dropping. This is telling us that crude oil, gasoline, and the heating oil are going sharply lower. Now, I'd like to mention that we have, I think, Bill Meridian in the room right now. Bill, are you there?
Yes, I am, Larry.
Okay, let me cancel my program here, and we'll get you started. So bear with us. Thank you for joining us today, Bill. It's a real pleasure to have you here. And go right ahead. We're ready for you, my friend.
Okay, let me try and get this set up properly. Can you see my screen?
Yes, sir. It's coming in beautiful. It says Cycles Research.
Okay. A reasonable probability is the only certainty.
I love that.
Yeah. Well, it's true. And this is the same as the last time I was on about 6 weeks ago. When will the investors and markets react to the deteriorating underlying fundamentals? I've been here in New York, New Jersey now for 4 weeks. And, I walk around, for example, shopping centers in New Jersey, or I walk through my old neighborhood at Greenwich Village. I was uptown, and you see a number of vacant storefronts.
A lot of vacant storefronts.
Yeah. And the cannabis business, and the reason I'm thinking of it is this Wednesday, my friends are having the Hemp and Cannabis Show at the Javits Center, as they do every year. And it's if you look at the stocks, it has not gone well. And if you talk to anybody in New York, well, why should you pay more from somebody who has to pay rent? Why should you pay more to them when you can get it on the street? And you can, in fact, call a phone number, and a cyclist will come to your place and drop it right off.
Wow.
So, and I went past one storefront. I guess they opened up, and they didn't get a license from the state of New York. I think the state of New York, I was told, has only granted 6 or 8 licenses in New York City. And there was a hemp and cannabis shop, and it had been closed down. It had been shut down
Bill,
because they didn't have the license.
Can I ask you a question? This is show you how inferior I am as far as the knowledge. When they mean cannabis, that's marijuana, right?
Sure. Yeah.
Now, do they sell it like with cigarettes, or they sell it with gummy bears, or what? I know they have quite a few of the shops here in Tucson. I've never been in one, but is that what they do? They sell it by pills and gummy bears and cigarettes?
But the problem is, with fixed costs being so high in New York, I mean, you need to put that in your price, and you can't. The guy on the street doesn't need to do that. And I've gone to these hemp and cannabis shows, I think, every year for 5 years. And at first, it was like a scramble of people trying to cash in on the gold rush. And then it started to shake out. And the last time I went 1 year ago, I met people of successful cannabis shops, but they're from Bermuda, they're from Costa Rica, they're from places outside of New York, outside of the U.S.
Okay.
So it isn't, the stocks have not done well at all. So anyway, so when will the market react to the deteriorating underlying fundamentals in the United States? Excess credit creation is more than making up for the crumbling fundamentals. That's why the markets they're still spending COVID money, I think. How long will this continue? I don't know. The period is much like the 1970s, which you and I remember very well. Interest rates went up over double digits. So when I hear them in the financial media here talking about rates, they can't go much. Oh, what do you mean they can't go much higher? They were 15 to 18% way back in 1980. Equity markets fell. The economy suffered. This is in the 70s. Real estate went into a recession forecasted by the 18-year real estate cycle, which is again at its high. And I know this sector has fallen the most since the July. Well, that's an old comment. I should take that out of there. We have a weak Democratic leader. We had Jimmy Carter then, and we have a similar leader now. We had conflict with Iran, and we had general chaos. And I remember walking around the streets, you had to, do a lot of vacant storefronts, and you had to do 360s just to make sure you weren't being stalked by someone. I think it's worse now. So now I love contrary opinion. Here is the cover to Barron's. This is March 11th, just before the April decline. Bet on the bull. Okay, it was only, it was a short decline. It was only 1 month long, but I'd like contrary opinion, and here we have a contrary opinion example. Now, I showed this the last time, and I apologize for the bad copy, but it's out of the book by, who's the big hedge fund manager up in Connecticut? Now I can't think of his name.
Tudor Jones?
No.
Ray Dalio?
Ray Dalio. It's out of his book, which I recommend, but it's the U.S. Central Bank balance sheet as a percentage of GDP. In other words, this is the amount of paper that the Federal Reserve has bought up in relationship to GDP. And this goes back to 1900. Wow. And as you can see, it is at an all-time high. And they were interviewing people on the street about the economy. And the one lady says out in Chicago, we need less inflation and more money. Wow. Which is a clear misunderstanding of what inflation is. But thus, you should not be surprised. People say, do you think it's a bubble? A bubble. I said, what do you pay for your shoes now is 10 years ago. What do you pay for food, versus 5 years ago? When I was growing up in the 50s, my grandparents said, boy, in the 30s, a cup of coffee was a nickel. Now it's 10 cents. What is it now? Especially if you go to Starbucks. So $3.75. Here's what too much money leads to. A John Lennon guitar sold for $2.8 million. A 1964 Framus Hootenanny 12-string guitar. A Beatles record and the fifth most expensive guitar ever sold. There you go, 2.8. This is what happens when you have too much money. And wow. In the past, I showed you the Superman comic books and Michael Jordan shoes. Well, here you have it sounds like we have an advertisement.
We got to pay a few bills. We'll be right back with Bill Meridian. Pay those bills. You got that right, brother. We'll be right back, folks.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're back with Bill Meridian of Cycles Research. Please continue, Bill.
Too much money? Okay, here we go. Too much money leads to crises. That is the average price for electricity per kilowatt hour in San Francisco.
Wow.
It has doubled since about 2016 or so. You can see that right here. The money's got to go somewhere, and I don't know why people don't seem to understand us. And too much money leads to crises. Here we have real house prices and rents indexed from Amsterdam in the Netherlands from 1620.
Mm-hmm.
So when people say the year 1620, 1620, when there were kings and queens and knights and bows and arrows and all that stuff.
That was the tulip bulb mania, wasn't it, back in those days?
Yeah, there was no internet, no cell phones, and now we're up here. And so that's gone from 100 to over, in other words, up more than 5 times. And I have to laugh, Larry, when you too, probably anybody experienced, they come on the media here. Well, do you think inflation, it's temporary and it's going to come down and they're going to do this, they're going to do that. Look at this. I mean,
I know.
Governments like to spend money and it has to be financed somewhere. And I said to my audience in Abu Dhabi about 5 years ago, I said, this will cease when camels learn to fly. And my audience said they fully expected to see a sky filled with camels before governments stop spending. So
that's a good one.
Here we are, and we've talked about the real estate cycle before. A lot of other people have too. We're at the peak in the real estate cycle, so we're peaking now. It should be 4 years down. Is this the start of something big? The net charge-off rate on bank commercial real estate loans, here's a peak, and here we're just turning up. So the start of something big, as Steve Allen used to say. Now here's one piece of good news. There's good news here. The retail price of cocaine has remained stable. See it down here? While purity is increasing. So it's not all bad news, folks.
Products I don't use, but that's interesting. Go ahead, please.
Yeah, well, if you take enough of that, then this isn't going to bother you, and this isn't going to bother you, and that's not going to bother you, because you won't know. You won't care.
This is true.
So now let's get to markets. This is the Dow Jones 500. No, I edited this wrong. It's the Dow Jones. The 500 should not be in there. But this is
100. I know. I got it. Yeah.
138 years of data. This is the expected return. In other words, the probability it's going to go up. Let's say 0.6 times the percentage it would rise. Let's say that's 3. That would be 1.8. But that's what that is. So as you can see, we're in a time period. May was up, and you can see June here. So this is, to give you some idea, June is not a strong month. Now, here's the average DJI performance within June. It's the same type of graph, but this is daily instead of monthly. And as you can see, we are now at the 3rd, so we're right in here. And you'll note this is usually a peak for the month. We're up. The peak is usually on the 4th. And again, this goes back a long way. So now here's the S&P. Now here's the S&P. This is the expected return, the month of June only. And you can see the first week is usually strong, and then it's downhill after that. Let's go one more. And that, by the way, is from, I think, 1929 or 30. Or 1928. So again, it's a long. Now this is since 1980. It's not a long period. The Nasdaq. This is the 100, and as you can see, all of them look the same. There's something bearish about the month of June. It has been the second weakest month next to September. And this is technology in June, and you'll note that technology has been very bearish from about the 4th through the 11th, and then it sort of oscillates, but most of the time it's in negative territory until the end of the month. So it is especially weak for technology in June. It's weak for all market indices.
Wow.
Now, we have a conflict here, and this is what, well, Larry, you read my report. So this is the very reliable S&P 500 index monthly. Let me explain what it is. It is the spectral analysis takes the cycles and calculates them and then decides which ones are most valuable, drops out the unprofitable ones and keeps the profitable ones. It was very successful calling the April decline. And here it goes straight up in June. Now, there's more than one set of cycles. I'm not even showing them all in this presentation. So let's go one further. And you've seen this before, but let me explain it because people may just be tuning in for the first time. This is the 1-year cycle, the red one. In other words, that's the average cycle of the year. The market is weak in September, October. It rallies in Q4. There's a spring rally, summer weakness, so on and so forth. This is the 4-year cycle, the blue one, which has been attributed to Federal Reserve action before the election, that the election year is the strongest. The year after the election has been the weakest for the S&P 500. And the reasoning, in quotes, behind that is the Federal Reserve's action. But what they fail to note is that this cycle existed before the creation of the Federal Reserve in 1913. And it exists in countries that have a 4-year election cycle, a 6-year election cycle, or no elections whatsoever. In plain English, there's a 4-year cycle, which is actually about 3.8 something years in length. So that is the 4-year cycle. And the 10-year cycle is from Edgar Lawrence Smith back in the 20s and 30s in Ameritrust Bank. Years ending in 5 have the best performance. Years ending in 0, the worst. Years ending in 7, usually bigger crisis. So years ending in 4, no major bear markets are started in a year ending in a 4. And you're also in the election year cycle, which has been the strongest. Now, down here we have the summary, the addition, vector addition of all 4, which has been right and somewhat wrong. It was right here in April. It was not quite correct in May. Let's blow this up to get a better look at it. This is Q2. So there you see April. And then you see, now the dynamic cycle rose in May. That's why I didn't pay much attention to that. But note that this thing peaks at the end of this week. Now just keep that in mind. It peaks at the end of this week. Now I think I mentioned this the last time, planetary clusters. Were first defined by
those are my favorites.
Neil Mickelson. He was an executive at IBM who in his spare time did astrology computing, programming. He had a company called Astro Computing. In fact, the American ephemeris is still considered by astronomers to be the most accurate, even though it was created for astrology. He came out with a book called Tables of Planetary Phenomena. The planetary clusters are defined by 5 planets within a 20-degree span. In other words, it's like a pie wedge. They are conjunctions with a wide orb. And as anybody who studied this knows, conjunctions, which means they're 0 degrees apart or together in space, tend to cause market tops. And there was a PC on August 25, 1987, that Arch Crawford spotted that led to his accurate prediction of a DJIA high. This high ended with the crash of October of 87. There were no PCs last year in 2023. In 2024, there was February 7 to 9, May 9 to 10. But now we're in the long one, May 26 to June 4, and June 4 to June. So May 26 to June 7, we're having a very long one. The May-June PCs are caused by the conjunction of 2 outer planets, Jupiter and Uranus. The other planets, faster planets, come in, and we'll finish this on the other side of the advertisement.
We sure will. Bill Meridian will be right back, folks, after a short break. Stay tuned. 877-927-6648.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97, and with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're back with Bill Meridian, Cycles Research. Bill, I don't know if you knew this, but Neil Michelson was one of my customers when I was at Drexel, and I traded soybeans for him, and we did quite well. And then when I got interested in astrology, he let me use all of his database to pull out these, aspects that I was looking for. Yeah, he was a friend of Twentyman's too, but we did quite well. He was a nice guy. Yeah, he had prostate cancer and died really young, but what a nice guy he was. He was real. So please go ahead, Bill.
His math was impeccable.
Yeah, he no room for error.
Nope. And the PCs are created when the smaller and faster planets catch up with the conjunction. In other words, with the big planets that happen to be conjunct. June, I wrote this a while ago, has been the second weakest month. Thus, the late May, early June PCs are most likely to lead to a top. Now, I have these are all listed in his book, and when these things occur, it's like crossing into the Bermuda Triangle. None of your instruments work right. You can sort of throw a lot of indicators out. Well, look what happened on Friday, Larry. I mean, the market was down.
Boy.
Did you see that rally in the last half hour? I had people emailing me saying, "Are you still bearish?" And we don't come out of this until June 7th, and I have a turning point on the 4th or 5th. So somewhere at the end of this week, the market's direction in June, which I still think is down, is going to reveal itself. Mm-hmm. So let's look at the S&P 500. First of all, you had a rectangle. It broke out of the rectangle, and normally you would go the height of the rectangle to the upside. Then you had a reversal day, looks like a hook sell signal right here. And then it came down and it broke below this dashed red line, which is the 3-day moving average, shifted forward 3 days in time, which was christened the key of the day indicator by Joe DiNapoli, who discovered it. Quite useful, the S&P. So reasons to be bearish. But here's the 10-day moving average of breadth, advances less declines. It's very oversold. So the fact that it's declining today and this thing is in oversold territory is not a positive for bulls. But the overall advanced decline line, the cumulative line, is still holding up pretty well. So like I said, the readings on the indicators are very tough during a PC. So now we have sentiment confirmations. CTA's exposure to equities. Is it outrageously high like it was back here in 17? Was it up 110%? No, it's a little over 70. But still, it's not down here anymore. They're not bearish. Mm-hmm. That's number one. Number two, positions in U.S. equity futures by asset managers. Well, it's higher than it's been going back to 2012. So that means they are exceptionally bullish, and those guys usually lag the market, so it takes a lot to get them bullish. So sentiment may be overly positive. And we're in the weak time of the year. I don't really believe in this too much, but anyway, the market has rallied. I think it's 0% from May through October, and through October through May, I think it's 12 or 16%. And most of that comes in Q4, so the market is highly seasonal. Now, a down April has been bearish. This comes from Optima. Rest of the year negative. April on the S&P side, if April is down, you get a down May, it goes sideways, and then August. I don't know if I believe in the rest of this, but I just want to point out that if the market is up in January, as we all know, that's quite bullish. If the second to that is April, as a key month. If both January or April are bullish, this is extremely constructive for the rest of the year. But we had a down April. So this is what Optima comes up with. My data goes back further than that, so I might show something different if I ran the same test. Mm-hmm. So now tech is overvalued. That's the PE on the tech, and you'll notice it's up where prior highs have been. And June has been a weak month for tech. Now, the red bars are the odds that the market is going to go up, which if you read that on the right scale, so it's only 48. That's not really weak, but that's technology. You can see September, it's really gotten clobbered. The blue line is the percentage change. The green line is the product of the red and the blue, that is the expected return. But in other words, we're going into a weak month. PE ratios are high. Sentiment is pretty overly done. Now, here's the relative strength of the sectors. Now, utilities came in number one, but I would discount that. The cycles show utilities turning down. Technology is number four. Energy has really taken a hit here. Now, you were right about that oil, Larry. I was wrong. I got that wrong. But technology, the energy sector has really slipped. So now this is the report I put out that I wanted you to see. This is the strong stocks. NASDAQ 100, Costco, Tractor Supply, Netflix, Amazon, NVIDIA, KLA, Intuitive Surgical, all come out highly ranked for seasonal position and relative strength. Now, here are the weak stocks. Cracker Barrel, which just got clobbered again. Intel, which, as you already know, is down. Mondelez, the food stock, which I imagine they're having a tough time with rising commodity prices. So this is the product. This is the U.S. stocks to trade. This is a monthly report for institutions. And what I say here is the May long recommendations are my picks out of the report, up 3%, and my shorts fell 1.3%, but the S&P was up 4.8%. Well, let's take a further look. This process has been applied to the Dow Jones. Let me get through this pretty fast. From January of 2020, the top 5 long stocks have risen by an amount about 60% greater than that of the short sales and 22% over the DJIA. Short sales were net negative at -4. It works best, however, with the S&P 500. Since January 2022, the top 5 outperformed the short sales by 112% and the S&P by 51%, while the short sales actually fell 30%. The NASDAQ is a bit dodgy. It really worked well last time. Top 5 stocks outperformed short sales by 143% and have been only 15% over the index, but the short sales down 25%. And the recommended stocks, my picks for the coming month, are below. Citigroup, Walmart, Costco, NVIDIA, Tractor Supply, Netflix, shorts, Salesforce, Intel, JB Hunt, the Trucker, Cracker Barrel, and Mondelez. So let's go down one. Now, this is extracted after I've done all of that. These are weekly cycles, and of all the cycles can be tested against all the other stocks. And the number one buy for this week is Qualcomm. So if you're looking for a stock to buy during this period when we're in the Bermuda Triangle of the planetary cluster, Qualcomm comes in at top rated. You see the weekly cycle, and I can't get into the details of it right now, but Intel is a short, and you see there's the buy, this is the short sale. In other words, it's weak in all the previous screens. Not only is it weak, but its weekly cycle peaks at the end of this week.
We're going to pay a few bills. We'll be right back with Bill Brady, and folks, stay with us.
Especially me.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that. as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, speaking with Bill Meridian, Cycles Research. Please continue, Bill.
So just to repeat, we're buying Qualcomm and selling short Intel over the near term. So let's switch to the fixed income market. Here we have the U.S. 10-year note, and you will note that June has been quite weak. The weak months are March, June, September, and December. And there's a particular time period, and you see it right there, the 11th through the 22nd, has been not the weakest. I think the weakest is in March and September, but it is certainly weak. From a peak up on the 11th, that is the average expected return. Okay. From 1982 to the present. So we are coming up to that time period. So short-term notes appear to have reversed to the upside over the last 3 sessions. So right now it's up. The next, that's a projected turning point, is a weak one on the 4th, likely a short-term top, and that is coming up tomorrow. The downside target is 107.2 on the U.S. 10-year note. I would wait to short the notes in the period from the 11th to the 22nd. Now, going long in a bear market is like running up the down escalator. So that's the I am negative, and longer term, I think rates are going to continue to go up. So if we're in a bear market and the seasonality is bearish, we have a short sale coming up here. And oil is now shifted into, we're now out here in June, and you can see the period we're in seasonally. So the bull is swimming upstream right now. Now that's June oil price behavior, and again, it's the same. It's the red is the probability of a rise, the blue is the average percentage change, and the green is the expected return. And you can see where we are here, that seasonally there's a low around the 21st to the 24th, but we're in a bearish period overall, as we can see here. And the weekly oil cycle has not been effective. It gave a buy signal here, and as we know, well, as of the moment, it's down here someplace, and we're coming up to a sell signal on the 8th. So at the end of this month, we have the monthly cycle pointing down, the weekly cycle, and the seasonality bearish. So I think oil is already declining before the signal, but I think it's going to head a lot lower after the 8th. And oil daily, and I'll skip that one. Now, gold, the next low is due on the 6th, 7th, which is in a few days. With the monthly cycle in decline, I doubt that price can make a new high. Gold is trending in a range with the prior 24.35 high as resistance and the prior resistance below at 20.50, 20.80 as support. It's in a trading range. Sentiment has become too bullish for substantial gains at this point, and the last high is likely to contain any upside moves. The monthly cycle does not indicate that gold will break out of this range in 2024. So gold sentiment is positive. about 70% of funds have no exposure to gold. These are potential buyers. Applying contrary opinion is likely to the gold is likely to maintain a floor under the gold price at around 2050. And there's the breakout. It broke out, but it hit its objective. The objective is up here, and it's probably not going to go below that line and not above that line, but it's still bullish, I think, for the longer term, just not right now. So what do? You go to, well, that's gold sentiment. We are not overly bearish or bullish. We're neutral here. So that's not really a factor. Now, gold is much stronger than the gold stocks, as it usually is, and that is the monthly gold history.
Why is that, Bill? Why is it that gold stocks are so lagging so far behind?
They always usually do. I don't know why. Well, with gold, if you're bullish gold, with a company, something could go wrong. The CEO could run off to Brazil with all the money. You have company-specific risk. And here, June, you see it gets increasingly bearish. This is 158 years worth of data. You can see there's a little. It's strongest in August and September. And this is Ed Dewey's book. Cycle book is available again from the Foundation for the Study of Cycles. It's the same book, but it had just gone out of print. So, do you have any questions?
No, it's really, really good stuff that you've given us. Each time you've been spot on in these markets for quite some time, and I just want you to make sure that when you travel, to travel safe, because it's a jungle out there, that's for sure.
It is.
How long will you be back in? How long will you stay in the States, Bill? For another month or so, or?
No, till November.
Oh, till November. Well, that's a considerable
Well,
time.
I used to come over twice for 3 months each time, and I decided to just come over once for 6 months.
Oh, that's good. Do you have a dual passport between Austria and U.S.?
Yes, I do.
Okay, great. Hey, listen, I don't want to take any more of your time because you're a busy fellow, and we want to thank you tell the folks how they could reach you if they wanted to get a copy of your letter.
Oh, it's cyclesresearch.com is the website, or you can just write to Bill at cyclesresearch.com.
Okay, my friend. Hey, listen, thanks for joining us, buddy. That's a really great presentation as always. So be safe, and thank you for the other thing we did this week. I appreciate your help very, very much. Okay,
sure,
buddy?
And I just want all new listeners, just remember, all of Larry's subscribers end up riding around in stakes and eating Cadillacs.
Not necessarily in each lifetime. I've been pretty lucky, though. I really have. I have no complaints.
Okay.
Thanks a lot, Bill. I really appreciate it, buddy. Okay, folks, let's give me a second here, and I will get my charts back up here, and we will take a look at some of these other things that we're looking at here. Hold on just a second. It takes me just a minute here, just a second here. Hold on. Time out. I got to come over here. Do a little clicking here and there. I know we've only got a little short segment here, and then we'll be ready to go. And then we're live here, and I wanted to get something in your bailiwick to take a look at here. This is the Dow Jones, okay? There's the rally that we had early this morning. This was the exact 382, folks. Well, let's just do the hourly chart, because that's a really interesting one to look at there. There's your hourly chart right here, and we've come down here. So what we need to do is to look at where we are right now, and as you can see here, we're getting up to almost to a 382 retracement. So you'd go down to a smaller time frame right here, and then you'll be able to move this over just a little bit and clean this out so we can see what's nice and clear. And you want to take a quick look at it, and you'll see, if you look at this, the 382 comes in here at 35.28, so it's not too far away. So watch that. That's going to be a real interesting one, because this is still a bear market, and we're going to find out if it can make that level or it can't. That's the main thing. Okay, let's take a quick look here at the wheat market. We've had several people ask about that, because corn, everything is moving down. Wheat by far is the most. You can see how bullish wheat is. We've been bullish this for a long time. This is the one you want to get ready to buy when the final buy comes in here. And as we look at this over the last few days, you can see we had a nice correction here, and we're in another correction right here. The rally that we had today was a spot-on 61% retracement of that low that we had last night. Look at that, just right on the money right here. That tells us that we're going right there. And the reason why we know that is because if you take the low right back here, make this your X, A, B, C, D, and there's your 1.618 A, B, C, D coming in here, taking out the lows here of the 17th of May, and that'll be a really good place to probably look to be a buyer of the wheat. So keep that in mind, folks. Very interesting. Stay with us. We got to take a little break, and we'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, just want to mention to make sure you do something nice for your friends and neighbors where you live, because everybody's having a pretty rough time in parts of the United States of America. So let's try to help our neighbors if we can. Also, tomorrow's guest will be Norm Winsky. He calls it like it is from Naples, Florida. On Wednesday, we're going to have Grace Morris, also from Florida. She's always got some really great stuff, and she's certainly been bullish the NASDAQ, and it's certainly been going up. On Wednesday, along with Grace's, we're going to have a little birthday party. Jim Twentyman, had he made it to this level, he's been gone 2 months as of yesterday. And I think that we'll remember him as his birthday. He would have been 79 on the day before D-Day, March the 5th. Boy, I sure miss that guy, folks. Let me tell you, there's not a day go by. I keep his picture right here on my desk to remind me how important he was in my life. Anyway, that's what we're watching here today, folks. So be sure to join us tomorrow with Norm Winsky. Wednesday will be Grace Morris. On Thursday, I believe we're going to have John Person. So stay tuned, and we'll see you on the flip side tomorrow. And may God bless.